3 months ago, when we last took a look at shares of Salesforce here on the channel, they were trading closer to $260 a piece. Just 90 days later, I'm seeing this company closer to $360 a piece in the after hours, up nearly 9% on the heels of reporting their Q3 results. As Salesforce is up nearly 40% over the past 6 months, we have to come in here and understand what is powering shares higher so rapidly over at CRM. When we take a look at the press release, from a surface level, it looks pretty decent at best. You're getting that 8% revenue growth, but as you begin to peel back the results, you're seeing staggering operating cash flows along with free cash flow growth. You're also seeing margin expansion, and then you're getting better than anticipated full year guidance that this company just provided. When we take a look at the products this company has recently unveiled and the products that they have in the pipeline, you'll start to begin to realize that Salesforce really is putting together a special company over there, run and led by Mark Benioff. And then when we get over to the technicals, this one has basically gone parabolic. So as an investor, it's up to us to come in here and decide whether shares of Salesforce still make for an attractive buying opportunity, or maybe perhaps it's best to sort of sit this one out at this point. We'll look to answer all of those questions and a whole lot more in this video. Hey guys, hope you're doing well out there. If you own shares of Salesforce, give yourself a pat on the back, because yeah, this company over the last 6 months is up nearly 40%. Year to date, you're up nearly 25%. But keep in mind, a lot of those gains have come since really the start of September, as this company was closer to, like we said, $260 a share just 3 months ago, and over the last 90 days, up nearly $100 a share. So you've seen rapid gains in shares of Salesforce. Now the question is, can those gains continue? And as the valuation continues to be pushed up for this company, now nearly a 33 times forward valuation, we'll see whether maybe the valuation is becoming a bit overextended, or at least getting there now that shares are rocketing higher. But from a Q3 perspective, it looks absolutely stellar. You got $9.44 billion of top line revenues. That was good for 8.3% growth year over year, beating expectations on Wall Street by roughly $90 million. What you did get though was a miss on the bottom line, as you had earnings per share coming at $2.41. That was a 4-cent miss. So not a huge miss, but again, coming in with those mixed results, that is Salesforce. Now you also got operating margin expansion over at Salesforce, both on a GAAP basis and a non-GAAP basis. Now you're looking at GAAP operating margins right at 20%. And we'll take a look at that when we begin to analyze this company's statement of income. And then the other really important metric with Salesforce is the cash flows. You want to take a look at the operating cash flows, especially, and along with that, the free cash flows, because the cash flows over at Salesforce is really, I think, what is moving the needle in terms of the stock price performance. Because look, you're getting that 8% revenue growth, which is still pretty decent on the surface, but what's really pushing this company to new heights is the fact that they're able to control those expenses so nicely while continuing to grow those revenues. As this company begins to tap into the AI revolution from a software perspective, you're seeing that translate into their free cash flows, up nearly 30% year over year, along with that operating cash flows up as well. So you're getting very solid operating cash flows and cash flow growth in general over at Salesforce. Now, along with that, what you're also getting is solid guidance. So this company is guiding for 9.9 up to, call it, $10.1 billion in Q4 revenues. Keep in mind, this was their Q3 fiscal 2025. And so we just have one more quarter left over at Salesforce before they flip over the calendar year. And so this company is anticipating right around 8% revenue growth for the current quarter, wherein that lands right in line, I would say, with what Wall Street was anticipating. They were closer to the high end of $10.1 billion, but again, coming in line with what Wall Street anticipating. Now, what they did do was bump up the low end of their full year guidance up to $37.8 billion in a very tight range, as you're expecting maybe the top end to come in closer to $38 billion. Again, that's for the last 12 months over at Salesforce. The other thing they did bump up was the margin guidance, as they're now expecting GAAP operating margin guidance to be just a shade underneath 20%. Along with that, they're also expecting operating cash flow guidance, operating cash flow growth to be right around 25% for the full year. So from a guidance perspective, you're getting slightly a beat and a raise over at Salesforce, because they raised the low end of their revenues. They also raised their operating margin guidance. Along with that, they raised operating cash flow guidance. And so from the financials, this company is guiding for a pretty stellar Q4. And then similarly, I would anticipate that to roll into fiscal 2026 for Salesforce. And for the really next 4 to 8 quarters, I would expect pretty similar stellar results over at Salesforce, where they're growing their top line, call it somewhere between 7 to 10%, and then they're growing their cash flows much faster, nearly 20%, which again, 20% compounded year over year. That's pretty rapid growth over the course of 5 years. You're more than doubling your free cash flows and operating cash flows. And again, that's the reason why you're seeing the stock rise so rapidly over the past couple of months. Now, along with that is the fact that you have a new product, a very groundbreaking product being released over at Salesforce, and that is known as Agentforce. This is really their competitor to what Microsoft has put out in terms of their Copilot. And so Agentforce is the complete AI system for enterprises built into the Salesforce platform and is at the heart of a groundbreaking transformation. This is Mark Benioff's word in this press release. And so the rise of autonomous AI agents is revolutionizing global labor, reshaping how industries operate and scale. And then with Agentforce, they're not just witnessing the future, they're actually leading it, unleashing a new era of digital labor for every business and every industry. So of course, you got a bit of fluff in that because it is the CEO himself speaking on his own company's products. So naturally, you'll get a bit of fluff and bit of a bump on their own products. But I think this reminds me a lot of what Satya Nadella tells you about Copilot over at Microsoft. Is it's basically changing how other enterprises are doing business and really how they manage their employees internally in terms of boosting scale, efficiency, and then also satisfying sales and customers across the board. And so if you didn't know, Agentforce was released back roughly, call it 3 months ago in the end of September. And it really is just those autonomous agents that make decisions, they complete tasks, they provide reliable and accurate results. They also do it really quickly and easily. You don't need to really know how to code to deploy these AI agents relatively fast. And then they're also pre-built agents that use actions from partners like AWS, Google, IBM, and Workday. And so these agents are really, think of them as AI employees, where you can tell these agents to sort of go and do menial task work, which maybe employees would take some time to do, but the AI agents can do very rapidly, leaving more free time for employees to do higher level work. And Salesforce really describes these Agentforce as the work that AI was meant to be. And I think I couldn't agree with that more. In fact, from Microsoft as well, you hear the fact that Copilot is really their take on what AI should be and what it should look like and what it should do. I think that's probably one of the best use cases, at least from an enterprise perspective, that an AI can have for enterprises, becoming basically employees, cutting down costs, improving efficiency, improving scale as well. That's probably one of the best use cases for AI in the enterprise. I think you see similar things from ServiceNow. Of course, you have Palantir, you have Adobe as well, along with Intuit. So all of these software companies, as the AI hardware revolution begins to roll on into software, I think these are the companies that are likely the biggest beneficiaries, simply because they have a very, very good enterprise reach. And yeah, you just saw the use case for AI in the enterprise. Now, from their financials, this was a stellar quarter over at Salesforce. What I have pulled up is the statement of income, but Salesforce provides it to you as a % of total revenue. So of course they provide the overall numbers. We got that $9.4 billion of total revenue. But what I really want to highlight is the improvements year over year this company is making as a percentage of revenue. So we have that 100% of total revenues. Again, that revenue top line figure growing nearly 8% year over year. But what's really, really important and what's crucial to notice is how well this company is controlling those costs. So first of all, your cost of revenues going down from 25% of your overall revenues now down to 22%. So that allows you to raise your gross margins from 75% now to 78%. Along with that, you're able to control your operating expenses. So things like R&D, sales and marketing, G&A, you're able to keep those flat year over year, again, as a % of revenue. And so what that allows you to do is grow your operating margins from 17% last year now up to 20%. So margin expansion, anytime you have a company expanding their gross margins and operating margins, that is a great sign, because for every dollar you now bring in over at Salesforce, 20 cents get trickled all the way down to your operating income. And again, that leaves this company with a fair amount to do things like buybacks and really spend on themselves. And we'll take a look at that in terms of their cash flow. But from an income statement perspective, I think how well they're controlling costs really speaks for itself. Maybe a lot of that is also due to the fact that this company probably employs those Agentforce agents to some degree within their own business. And so you can sort of have a direct ROI on your own products, because I'm guessing to some extent Salesforce employees also use Agentforce themselves. From a balance sheet perspective, it looks absolutely stellar over at Salesforce, nearly $8 billion of cash and equivalents. You have another nearly 4.7 in marketable securities over the last 9 months, those slightly trickling down. But as we come down to the liabilities, you'll see they paid off the current portion of their long-term debt. They also have nearly still $8.4 billion in total long-term debt remaining. But again, like we said, nearly call it, what is that, $13 billion in cash and marketable securities. So this company is very, very flushed with cash, nothing to really worry about from a balance sheet perspective. From a cash flow perspective, you have that nearly $1.5 billion net income figure, translates to call it $2 billion on the nose in terms of operating cash flows. Again, last year you were at just $1.5 billion. So again, operating cash flow growth of nearly 30% year over year. That is phenomenal. That's what we're seeing similarly on the 9-month basis, from 6.8 up to call it $9.1 billion from an operating cash flow perspective. That leaves this company with a fair amount to spend. And so first thing I want you to notice is the fact that your CapEx is very, very small. It makes up right around 10% of your operating cash flows. And so when you take this nearly $2 billion operating cash flow figure, you subtract off $200 million in CapEx, leaves you with right around $1.8 billion in free cash flow that this company can then begin to deploy. And so what they do is spend nearly $1.3 billion buying back their own stock. They spend a little bit in the form of dividends, as you have nearly $400 million in a quarter on dividends. You also pay back some debt, as you got that $1 billion debt repayment over the last 9 months. So again, from a cash flow perspective, this is why you love Salesforce at this point. For the longest time, this company wasn't really generating a lot of cash, and they were sort of just burning through that and had very low margins. Now they've reached a point of scale along with efficiency where they can begin to print boatloads of operating cash flows that certainly nearly fully translate into free cash flow because their CapEx is so low. Similarly, you'll see this with other companies like, again, Adobe, Intuit, ServiceNow, and Palantir, simply because the software industry has very low CapEx and pretty high operating cash flow generation, leaving this company enough to do buybacks, now pay a dividend, and along with that, pay off their debt. This is really what I would expect Salesforce to continue doing over the next, call it 1 to 2 years at least. Continue buying back a fair amount of stock, reducing those shares outstanding, paying off some debt, and begin to increase that dividend year over year. This was a stellar quarter over at Salesforce. Now, the fact that it was a stellar quarter is absolutely being priced in, and in fact, it has been priced in over the last 3 months as this company, and really as the stock, has gone parabolic. So now, if you own shares of Salesforce, what you can probably do is continue to hold them, because look, you've had a pretty stellar run, but there's nothing in these results telling me that that run is going to end. If anything, Salesforce will continue to put up these stellar results, and as you've broken to new all-time highs, you can probably continue to expect momentum to push these shares higher and higher. But certainly if you don't have a position in shares of Salesforce, would I be overly excited to come in here, jump in to shares and begin allocating a full-size position at this point? Certainly not, because look, you're still now getting to a richly valued company, closer to 35 times, call it 36 times a forward earnings multiple if you account for the after hours gain. And yeah, a company now trading at 36 times begins to look a lot more fairly valued, if not richly valued, considering the fact that just 3 months ago, it was down here in the 260s, probably trading closer to 25, 26 times an earnings multiple. So you've seen rapid multiple expansion over at Salesforce, some of it absolutely deserved as this company rolled out Agentforce, which looks to be a hit in the marketplace, especially from an enterprise perspective. But again, from a stock perspective, you've seen a lot of that be priced in over the last 3 months. And so from purely a risk reward perspective, not nearly as attractive now. And so for that reason, if you don't have a position CRM at this point, I wouldn't be overly excited to come in here and step in and be an aggressive buyer. Certainly on any major pullbacks, if you can get pullbacks back down to the low 300s, if not at least down to the 320s, closer to the bottom end of this range, I think you can absolutely come in here and step in and be a buyer in shares of Salesforce. And then over the long term, you're probably continuing to head up to new all-time highs and begin to push up, I'd say close to $400 a share. But again, it's at this point where it's easy to be FOMO'd into a stock. I would wait for deeper pullbacks. I would wait for this one to come to levels where it makes sense from a valuation perspective. I'd say 30 times or underneath a 30 times earnings multiple, and be patient with shares of Salesforce. Certainly you'll see those pullbacks, and anytime you get those pullbacks, I think that is your point to step in and be a buyer. Until then, if you own shares, I think you can absolutely continue holding them, because along with the buyback, you also now get a dividend in shares of Salesforce. That was my take on shares of Salesforce 3 months ago. This company was a whole lot cheaper. Now they've done a lot of progress since then. They've released Agentforce, which I think is a fantastic product, especially competing against Microsoft's Copilot. But the valuation begins to reach a point where I wouldn't say it's an overly aggressive buy, in my opinion, in terms of shares of Salesforce. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.